What are the top 8 safest banks for your money in the US in 2025? Hello, members, super savers, and bond course fans. I hope you're healthy and well. Today's video is our annual update of the 8 safest banks in the US. Here are the 3 topics that we'll be covering in today's video. 1. Has our personal list of the top 8 safest banks in the US changed this year? This section of our video should be of particular interest to those of you in our community who do business with Merrill Edge and E-Trade. 2. Which other global institutions make our list of the safest banks? And 3. What do the latest bank and credit union failure numbers tell us? As usual, here's our front of video disclaimer. For a detailed disclaimer, please refer to the end of this video. Let's dive in now, folks. Has our personal list of the top 8 safest banks in the US changed this year? As many in our Diamond NestEgg community have heard me mention before, these are 5 of the most important indicators used in the industry to determine the health of a bank. First is profitability, how much money a bank makes, and how large are factors like the net interest margin, or NIM. The NIM is the difference between what the bank pays its depositors and what it charges its loan customers. Second is provisions for loan and other potential losses. For example, how much the bank has already set aside to cover likely future losses on its loans, because not all borrowers will pay back 100% of what they initially borrowed. Third is capital and liquidity as a percentage of the balance sheet, meaning how much money is available to cover any additional losses from bad loans or other misadventures a bank may experience and that are not already covered by loan loss provisions or similar reserves. It also includes how much money is readily available in liquid cash. Fourth is any unrealized losses, for example, on held-to-maturity securities, which is the loss that a bank would incur if it had to sell its treasury or other debt securities before maturity, say because depositors are withdrawing money at a faster rate than the bank has liquid cash for. Note that in good years, a bank may also have unrealized gains as an additional reserve. And fifth is the bank's credit rating by independent agencies such as Moody's, Standard & Poor's, and Fitch. Now, all these factors are informative and used often in the industry to assess a bank's health. We use them here at Diamond NestEgg as well, but when it comes to bank safety, these numbers alone don't necessarily tell the full story, because they are often more historical and backward-looking, and as such may be less helpful when you want to predict what will happen in the future. In our mind, what ultimately makes your money and my money safe is government backing. And this government backing comes in 2 forms. The first and probably most well-known is FDIC insurance, which nearly all banks have to have by law. FDIC insurance covers up to $250,000 per depositor per insured bank for each account ownership category. The second, and often less well-known, unless you're a Diamond NestEgg regular and already watched our previous videos on the topic, is GSIB status. GSIBs are global systemically important banks. In layman's terms, these are the banks in our country that the government will do everything they can for as long as they can to keep them from going under. The reason being that one of these banks failing may draw the entire banking system into the next global financial crisis and the real economy with it, and no one really wants that. In our mind, GSIBs are the banks that have the most government backing, and that is where their safety comes from. Because even when a GSIB collapses, the government will most likely step in and do whatever they can to save it. And that is why our personal list of the top 8 safest banks in the US comes from this list of global systemically important banks, all of which have more government backing than just FDIC insurance. GSIBs are subject to stricter regulation. For example, they're required to have more capital and liquidity on hand than non-GSIBs. GSIBs are also subject to higher supervisory expectations, such as how they manage risk, governance, and internal controls. And risk management, governance, and internal controlling in the current market environment remain as important as ever given the uncertainties around inflation, interest rates, trade, and tariffs, to name just a few. This list of global systemically important banks is provided by the Financial Stability Board, and they're ranked according to buckets. The higher the bucket, the more globally relevant a bank is, and the more capital it needs to have on its balance sheet. And this list, it is updated annually, but usually there aren't big changes, unless there is that rare occasion as with Credit Suisse and UBS in early 2023, where GSIB gets into a merger or acquisition scenario, which means that for this year, our personal list of the top 8 safest banks in the US has not changed either. And when you think about it, this stability is really reassuring, because who would want to have a new list of GSIBs every year? That said, while there weren't any big changes over the past year to the GSIB list, there were some minor ones. So let's see what those were. So in bucket 4 at the very top is the GSIB that holds the most additional capital in percentage terms in its coffer, meaning it should be most able to digest and manage financial losses and external shocks. Bucket 4 needs to hold an extra 2.5% of capital above and beyond what other non-GSIBs are required to hold. And in this bucket, there's only one bank across the globe. It's JP Morgan Chase. In bucket 3, with an extra 2% of capital, we only have one this year, and that's Citigroup. Bank of America was in bucket 3 the past few years, but has been moved to bucket 2 over the past 12 months. Bucket 2 needs to hold an extra 1.5% of capital, and ranked just alphabetically within the bucket, below Bank of America, we have Goldman Sachs. And in bucket 1, with an extra 1% of capital, we have, again in alphabetical order, Bank of New York Mellon, Morgan Stanley, State Street, and Wells Fargo. Do note that there is, in theory, a bucket 5 at the very, very top, with additional capital requirements of 3.5%. But bucket 5 is empty, and has been empty for quite some time now. So, for those of you who've asked us about how Merrill Edge and E-Trade are doing, you should know that Merrill Edge is owned by Bank of America here, and E-Trade is owned by Morgan Stanley here. Now, never say never, but the way I see it, if the government will step in and do whatever they can to save a GSIB, this implicit backing for Bank of America should also protect Merrill Edge under its umbrella if worse ever came to worst. And the same principle means that Morgan Stanley's ownership should also provide E-Trade customers with the same implicit government backing. Because keep in mind, all these GSIBs have multiple lines of business that contribute to their bottom line, meaning that Merrill Edge is just one part of Bank of America's larger business, and E-Trade is just one part of Morgan Stanley's larger business. So if Merrill Edge or E-Trade were to ever get into a temporary financial slump, their parent companies, these two GSIBs here, with their deeper pockets, would presumably be there to support them in a way that would not be possible if Merrill Edge or E-Trade were just standalone entities like Fidelity, Vanguard, and Schwab. And of course, it helps even more that in this case, both Bank of America and Morgan Stanley should both benefit from their status as GSIBs. All right, if you want a deeper dive into these bucket calculations, I've included the Financial Stability Board's link to this most recent list of global systemically important banks in the first pinned comment below this video. So to summarize, in the current environment, we continue to think that bigger is better, at least for banks. Because these 8 GSIBs, they have more resources, more risk managers, more experience, and more capital to weather whatever storms may lie ahead. And they also have more regulators looking over their shoulder to make sure they are handling our money properly. Not to mention the implicit government backing, of course. Now that you know our personal list of the top 8 safest banks in the US, let's move on to the next section of this video. Which other global institutions make our list of the safest banks? So, you should know that this full list of global systemically important banks includes not only American banks, but also European and Asian banks, some of which have a not insignificant presence in the US. Let's quickly go through what these other safest banks are, because I know that some of you in our Diamond NestEgg community have asked about them. Here is the full list of the safest banks, or GSIBs, in the world at the time of this taping, organized by bucket, percentage of additional capital required, and bank name, as before. Again, bucket 5 with additional capital requirements of 3.5% is empty, even when we expand our list globally. So let's start with bucket 4 with an extra 2.5% of capital. And here, also again, as we mentioned earlier, we have just JP Morgan Chase. In bucket 3 with an extra 2% of capital, we now have Citigroup and HSBC this year, ranked alphabetically, as in the earlier table with just the top 8 safest banks in the US. In bucket 2, with an extra 1.5% of capital, we have quite a few European and Asian banks that have been added to what had previously only included American-based Bank of America and Goldman Sachs. And the one change here from last year is Groupe Crédit Agricole, which has moved up from bucket 1 over the past 12 months. And in bucket 1, with an extra 1% of capital, we also have added quite a number of European and Asian banks, alongside Bank of New York Mellon, Morgan Stanley, State Street, and Wells Fargo. So, curious minds want to know, do you keep your hard-earned money with any of these banks here? If not, who are you with, and why? What do you love about your bank? Drop a comment below and let me and everyone know. Or perhaps you're with a credit union, because while the GSIBs here take pole position in terms of safety, in our opinion, they can sometimes be lacking in other areas. Customer service and that extra personal touch, for example, come to mind. In any case, now that we've covered our personal list of the 8 safest banks in the US, as well as some of the safest banks across the globe, let's talk about something on the opposite end of the bank safety spectrum. What do the latest bank and credit union failure numbers tell us? So the good news is that the latest bank and credit union failure numbers paint quite a nice picture overall for this year, at least so far. If we look at the FDIC bank failure in brief summary, let's scroll down a bit. This was what 2023 looked like. This was what 2024 looked like. And this is what 2025 looks like so far. The blue bars show the total assets in millions of the failed banks for a particular year, and the red bars show the total number of bank failures. At the time of this taping in 2025, there have been only 2 bank failures so far in the US. The Santa Ana National Bank in Santa Ana, Texas, with $63.8 million in assets and $53.8 million in deposits. And Pulaski Savings Bank in Chicago, Illinois, with $49.5 million in assets and $42.7 million in deposits. So both quite small by banking standards. As you can see when you compare these numbers to 2023, which saw some more substantial bank failures in the US with Silicon Valley Bank, First Republic, and others. On the credit union side, there have been a few more mishaps in 2025 so far than in previous years. 5 credit unions went into involuntary liquidation, conservatorship, or even both. Butler Heritage FCU in Ohio shows up twice on the list. First, as a conservatorship, and then as an involuntary liquidation. The other names are Seoul Community FCU in Georgia, Aldersgate FCU in Illinois, Unilever FCU in New Jersey, and Valwood Park FCU in Texas. None of these are a big name, though. Hopefully, things will stay relatively peaceful for the foreseeable future. But as always, we'll keep you posted if things change or take a turn for the worse. All right, members, super savers, and bond course fans, I hope you enjoyed today's video and learned something new. And for the New York, New Jersey, and Connecticut folks in our community who have young savers in their lives, think age 25 or under, check out Ava's latest video here on a 6% high-yield savings account that you can now easily open online. 6% is pretty much unheard of these days for a bank account, at least as far as we know. So hopefully some of you and your loved ones will be able to take advantage of this great rate. And as always, if you want to learn more about bond investing and building out a bond portfolio while rates are still attractive, then check out this video here on our bond courses because rates haven't been at these high levels on average in decades. I've linked all the details on our bond courses and our YouTube Super Saver membership below this video for your convenience. And see you again very soon with more brand new wealth building content for your financial journey.